Well, good morning everyone and welcome back to Moneycontrol live stream. You're watching the opening bell. I'm your host Santosh Nair. The benchmark indices are poised for a flat start this morning, tracking the mixed cues in global markets. At this point, Asian markets are mostly trading higher. Last evening, US stocks ended mixed as negotiations on the debt ceiling continue to drag on. Tech shares, however, saw a smart rally yesterday. And back home, you have foreign institutional investors who continue to remain net buyers. They picked up shares worth about 539 crore rupees yesterday. Now, the sense we are getting speaking to brokers in the market is that a lot of foreign money that has been coming into the market over the last month or so, most of it has been in the nature of passive flows. That means that money is coming in mostly through funds like exchange traded funds and index funds. Active fund managers, however, at this point in time still have little apprehensions about valuations. They feel that the market is not exactly cheap at this point. But however, the momentum in the market remains quite strong at this point. Meanwhile, domestic institutional investors do continue to be more active on the buy side. They picked up shares worth about 338 crore at the net level. So clearly, the bullish sentiment is being seen across institutional investors, both foreign as well as domestic. However, HNIs are set to be in profit booking mode. They've had a good run. They made good money in mid and small cap shares, and now the sense one is getting is that they are going a bit easy, not wanting to chase prices. Overall, the fourth quarter result season has been much better than what market has been expecting. That said, there is enough cause to believe that valuations may slowly be getting ahead of itself after the strong run up that has seen in the last couple of months. And now let's get going and discuss some stock strategies with Hemen Kapadia. Hemen Kapadia is a well-known technical analyst. Hemen, thanks for joining us this morning here on Opening Bell.
A very good morning to you, Santosh. Thank you for having me on the show.
Right. So yesterday we saw the market making a good comeback, the Nifty in particular, although the Sensex ended on a bearish note. We saw a good pullback in the Nifty. So what is that indicating to you?
Two, three things, Santosh. The first thing would be we had the monthly expiry and 18,200 as far as the Nifty is concerned held firm, which was important. Now, if you see, we've had a 1,600 odd point run up, Santosh, over the last couple of months. We are overbought. We needed to correct. We've cooled off a bit, but frankly speaking, if we look at the quantum of the rise, the correction has not been deep. We've taken some time, but not price. But it's very clear that if we have to go up further, 18,450 needs to be taken out, and then we see an upside coming in. And more importantly, yesterday, the recovery was also led by Reliance. Reliance is important in terms of sentiment and the weightage it has on the Nifty. So Reliance has staged an intraday recovery. The Nifty staged an intraday recovery. Obviously, this is going to spill over to today's trading, and 18,200 holds, which is another positive. But yes, 18,450, Nifty needs to get taken out. And if it's a bank Nifty, Santosh, 44,152, which was the all-time high posted on 14th December 2022, needs to get taken out. Till then, I think it's stock specific. My only fear or fly in the ointment sort of a thing is the dollar index is still positive. We can see further upside, and the Nifty OI was at 87 lakhs yesterday closing, which is at a 2-year low. I mean, if we are on top of 8,200 looking set for a further upside, the Nifty low OI is slightly disconcerting, Santosh.
Okay, so Hemen, so what do you think is holding back players at this point in time, and what are the key cues that are you're picking up from yesterday's expiry in terms of the rollover and what it means for the market?
Frankly speaking, I think when you were giving your introduction, you mentioned the valuations. I believe that is a major concern, and sentiment-wise, the debt ceiling is a cause for concern. If you've seen internationally, copper is under pressure. I mean, now all these things. I mean, if worldwide industries need to go do well, there should be a demand for copper. If copper is down, That is a little bit of a cause for concern. So VIX is still 12.5. VIX has been subdued for almost 2 months now. Santosh, I mean, only if it crosses 14 or 15 would we be worried about the market coming under severe pressure. And it has been slightly world markets which are under pressure, but India, Japan, and Korea stand out. So, frankly speaking, it's all over the place. If you were to take a conclusion out of this, I believe that we are consolidating. We are one of the better looking markets worldwide as of now. 18,200 doesn't break, 43,400 Bank Nifty doesn't break. We are fine. We are hunky dory.
Hemen, you were mentioning Reliance Industries a short while back. So, what are your targets for Reliance Industries? Where do you see the key support and resistance levels at?
Key support is 2420, Santosh, followed by 2380. 2480 on the upside is resistance, followed by 2500. Now, yesterday we went briefly below 2420. We posted an intraday low of 2416, and we've turned from there. Reliance is in an intermediate uptrend, but we've had a very nice move from 2180 to 2500. So it's sort of taking a breather, a time and a price retracement. I believe that if 2420 doesn't break in terms of closing, that is a positive, and about 2420, 2480, 2520 and 2570 are two targets, Santosh, for the June expiry, and we have a long June expiry. 29 June is the last day of the FNO expiry.
Okay, Hemen, stay with us while I quickly take our viewers through some of the key stocks to keep an eye out for this morning. Life Insurance Corporation, Macquarie, has retained its overweight rating on the stock with a target price of 850 rupees. According to Macquarie, the value of new business growth was driven by margin expansion in group business and also growth in annualized premium equivalent. The brokerage has said that the highlight was the growth in embedded value on the back of strong growth in value of new business as well as higher unwind rate. And according to Macquarie, the strong growth was supported by higher margin in its group business, and the management now is focusing on realigning its agency force and also strengthening its bank assurance channel to grow the share of non-participatory products. Zee Entertainment also will be in the limelight today. The fourth quarter net loss now stands at 196 crore. During the same quarter last year, the company had reported a profit of 182 crores. The stock has been under pressure for quite some time now. Revenues were also down about 9.1% to 2,112 crore. Operating profits down sharply 71%, and operating profit margin was down to 7.2% versus 22.7%. So steep drop in operating performance there, and the stock could be under pressure this morning. Page India, the fourth quarter net profit down by about 59% at 78.4 crores versus 190 crores during the same period last year. Revenues were also down by about 13% to 969 crores. The stock had rallied to 54,000 rupees levels sometime in October, but since then it's been steadily coming off as the quarterly performance has not been up to market expectation. There were many who felt that the worst would be over with the third quarter and things actually should start looking up from the fourth quarter onwards. But from the numbers, it seems like that's not the case so far. The management had sounded cautious in the recent past, and market will be closely keeping an eye out for further commentary from the management before firming up a view on the stock. Operating profit margin was also down sharply to 14% compared to 24% during the same period last year. Gokuldas Exports net profit down 23% to 47 crore rupees. Revenues are down by 11% at 523 crores. Margin has been pretty much steady at 13.4% compared to 13% last year. SAIL has also reported a decline in its fourth quarter net profit. It's down by about 53.2% to 1159 crore. Revenue has fallen by 5.3% to 29,131 crore. Operating profit was down by 33%, and operating profit margin too has fallen sharply to 10% versus 14% during the same period last year. Vodafone Idea has reported a fourth quarter net profit quarter net loss of 6,400 crores versus a loss of 7,990 crores. So there's been some narrowing of the losses there, but revenue has remained pretty much flat. And well, with that, the market has opened, the Nifty has opened on a firm note. It's up by about 46 points in early trade, inching closer towards the 18,400 mark. Short while back, Hemen Kapadia had said that 18,450 is the key level that needs to be taken out before the uptrend can be confirmed. So that is something that traders and investors will be keeping a close eye for. Nifty Bank is up by 49 points in early trade. That's up about 0.1% at 43,703. Now, overall, the banking story, which appeared to be very strong till about a couple of months back, there the narrative appears to be turning a little bearish because of the expected pressure on net interest margins. Remember, banks benefit as long as interest rates keep rising. That is because they are able to reprice their loans at a much faster rate. But when rates start coming off, the same principle once again applies. Your loans get repriced at a lower rate, but whereas the deposit, they stay high. So that obviously leads to a pressure on the net interest margins of banks. So that is something that is worrying the market at this point. The Nifty PSU Bank Index is flat at about 3,976. That's up about 8 points over the previous close. Nifty IT is strong in early trade today, up about 181 points or roughly 0.7%. The metal index, which was among the big underperformers yesterday, we had Hindalco, Tata Steel all coming under pressure yesterday. Those stocks appear to be doing well in early trade this morning, up by about 22 points. There's good demand for FMCG stocks as well. The Nifty FMCG index is up by close to about 58 points as we speak. Pharma under pressure though, down slightly. The index is at 12,426. That's down by about 29 points. Well, and with that, let's take a quick look at the gainers and losers in early trade. Adani Enterprises, Bajaj Finserv and Maruti Suzuki are among the key gainers in early trade. The stocks are up between 1 to 2%. Also on the gainers list this morning at this hour are Tech Mahindra, Infosys and NTPC. So good strength seen in IT stocks, which are largely dominating the list of gainers. We have also BPCL, Kotak Mahindra, which are up by close to about 0.5% each. Among the losers this morning, we have Eicher Motors, Power Grid and Grasim. All the stocks are down close to about 1% each. And also on the losers list are Sun Pharma, Axis Bank and Cipla, down by close to 0.3%. So it's a bit of a flattish start this morning. Overall, the mood appears to be a little cautious at this point. Let's get back to Hemen for his views and thoughts and takes on the stocks as well as market. Hemen, thanks. I just wanted to pick your thoughts on the IT space. Pretty volatile there, but over the last couple of days we've been seeing good strength in some of the key stocks there. So how do you see the big stocks in that space performing in the short term?
Santosh, IT has been corrective since I believe January 2022, where it peaked. So we are almost 1.5 years into the correction, and now we are seeing stability very clearly on the weekly charts. This might also get converted into stability on the longer term charts. There is also a positive or a negative hangover due to the Nasdaq. Now, like you mentioned, Dow Jones was slightly negative, Nasdaq was positive. Nasdaq has not only posted a medium term bottom, I believe it might have posted also a longer term bottom. We closed at 12,698. 13,000 is resistance. We are in a very clear established intermediate uptrend as far as the Nasdaq is concerned. Now that either has a clear positive rub off on our markets. Now coming back to the Nifty IT, it's looking better. And yes, I think the rupee looks like depreciating. The dollar index is strong. So pharma IT would benefit. But yeah, IT index, we're a very peculiar situation, Santosh. 29,284 is resistance for the Nifty IT. And we are at 29,127. But yes, the setup looks good. And if you're the mainline stocks that you mentioned, Infi has been the weakest of the lot. TCS has been the strongest of the lot. But if you see a whole bunch of mid-cap stocks which were not doing anything, Santosh, have started performing. You look at intellect design arena. You can look at Birla Soft, LTTS, Mindtree, Emphasis. So many of the stocks which were down and out have seen a strong comeback. And the way I see it, if the market remains positive, IT should be right at the helm of things. So the setup in IT as a sector, whether it's led by Nasdaq or our internal good earnings, seems a bit better than the rest of the market, Santosh.
Thanks, Hemen. Now, moving over to banking stocks, the story appeared to be quite strong till just about a couple of months back, and suddenly there the narrative now appears to have shifted. The big worry is the pressure on net interest margins because of rising deposit rates. So, how do you see some of the big names faring in this space, say SBI, HDFC Bank, ICICI Bank?
Okay, traditionally, Santosh, if you see, it's been HDFC Bank and Kotak Bank at least the last 20 years, which normally lead the bank Nifty. And the private sector bank has a weightage of around 70% in the bank Nifty vis-a-vis the PSU banks, which are around 30%. Now, this time we've seen underperformance in Kotak Bank as well as HDFC Bank, but the lead has been taken by ICICI Bank, somewhat of an Axis Bank, and yes, like mentioned, State Bank of India. But all of them have had a brilliant run-up in various forms or the other. Now, if you look at the bank Nifty, there's a small rounding top, which is a bearish formation. So there is major profit booking. It wouldn't be surprising because we've recovered from sub 39,000 Santosh to test the all-time high of 44,000. That's a huge, humongous move. PSU banks are very clearly slipped into a correction. It is SBI which stands out in the sense, I mean, SBI leads the PSU bank brigade. Everything else follows, but SBI is taking a small breather, but the relative strength is apparent. ICICI Bank, the daily mechanical indicators have all signaled a sell, Santosh, and the stock is corrective. We've broken a demand line, which has supported this entire move over the last couple of months. So, frankly speaking, is a laws of gravity catching up. We've had a very nice run up, and for the reasons that you pointed out, we walked into a correction, valuations, and technically also. So many of the mainline stocks are taking a breather. On the other hand, Axis Bank stands out. ICICI Bank is looking heavy. State Bank is looking better. BOB and Can Bank look corrective. So all over the place. Simply put, you can't run 2 marathons in a row. So we've had a brilliant run up. We're taking a cool off. Nothing else.
Okay, Hemen, also now I wanted to pick your thoughts on the defense sector. That's a set of stocks that have been doing really well in this market, and the numbers, the quarterly performance too, seems to be justifying that kind of an up move. So, what do the charts say at this point? We've seen a good run up. We are also seeing continued interest even at these levels. Order book position is pretty strong. But what do the charts say, Hemen?
I don't think we have a defense index, Santosh. That would have helped a lot in identifying technical gist of the whole sector. Now, we don't have that. HDFC is coming out with a defense fund. But like you mentioned, now you have HAL, Hindustan Aeronautics, higher tops, higher bottoms. We have been in an established longer term uptrend for the last 3 years and counting, Santosh. So, the sector, like you mentioned, there is a buzz. Many of them have moved up. Something like a Cochin shipyard or maybe even a Moscow dock. They look good. Some of them have walked into a correction, but the big one I believe is HAL. Now that looks positive even now. Moscow dock pulled off a bit, but if you look at the longer term setup, we've had a time price correction, but the structure remains positive from that point of view. Another stock which I used to like but has slipped into a correction is BDL, Bharat Dynamics Limited. That has cooled off a bit, but all of them still don't look bad. And yes, if they have seen near-term upside, the quantum of the rise would lead to a correction. That's what is happening. But the longer-term setup, I agree with you totally, Santosh. They look good, and it would be more of a buy on decline rather than chase anything right now.
And how do you see the metal space? Some fair bit of volatility there. How is this index expected to fare in the near term?
Well, normally, if we were to look at anything, I think we normally take a reference of international copper, Santosh. So international copper is in an intermediate downtrend. That does not augur well. It's almost like a lead indicator to what is going to happen in the metal sector. So International copper is under pressure. Now we have seen this percolate down to the metal stocks. And if we were to look at the Nifty metal index, I think it's a similar story. But compared to what is happening to international copper, the metal index has bounced back and is doing relatively better despite the dollar index going up. So there is a dichotomy over here. But if you take a slightly near-term view, the Nifty metal index and the metal stock, whether it is Jindal Steel and Power, Hindalco, Hindustan Copper, all of them look like giving a corrective bounce over the next week or two. So if you have a slightly shorter-term view, Santosh, they look good.
Okay, and within the pharma space, there's been one underperforming sector for a very long time now. Do you see the trend changing anytime soon there?
Well, pharma space, one has to be slightly script specific. Santosh, if you look at the Nifty Pharma Index, we have been corrective for almost 18 months now. There is some medium-term stability. The long-term charts are still not in sync of a very big move, and it's all over the place. You see stocks like Aurobindo Pharma, you see stocks like Glenmark Pharma, they posted long-term bottoms and they are giving very smart moves. On the flip side, Sun Pharma has given a downward breakout from a 2.5-year upward sloping channel on the weekly chart, on the monthly chart, and mechanical indicator like the MACD, RSI, stochastic, they've given crossover sells. So it's all over the place. But yes, as of now, at least from a medium-term point of view, the pharma index looks more positive than negative. A bounce is underway. If this has to fructify into a bigger move, we need a base formation and then a bounce back. But like I said, few stocks, Glenmark and Aurobindo, are not people's favorites, but they posted longer-term bottoms. So it's very, very selective. Something like an IPCA tanked miserably, now is stabilizing, but we have results coming in, and results can be brutal. So I think it's just specific rather than sector specific as far as pharma goes.
Well, so the key message coming out from Hemen is that the markets are in a range between 18,200 to 18,450, 18,200 being the key support level and 18,450 being the major resistance that needs to be taken on. Hemen, on that note, thank you so much for joining us on Opening Bell and sharing your insights with our viewers. And that's all that we have time for in this edition of Opening Bell. Thank you for watching, and we'll be back with you again on Monday at 9 a.m. So have a good weekend.